A sweeping overhaul of international tax rules. Nearly 140 countries agreed Friday to ensure that big companies pay a minimum tax rate of 15% and make it harder for them to avoid taxes. The OECD, which has been leading the talks, said the deal would cover 90% of the global economy. The Organization for Economic Cooperation and Development said that would allow countries to collect around $150 billion in new revenues annually. The deal comes as tech giants set up operations in countries with low taxation rates. The agreement aims to prevent big companies from shopping around for low tax rates and from booking profits in low-tax countries like Ireland, regardless of where their clients are based. The elusive deal was attained only after Ireland, Estonia, and Hungary agreed to sign up. Only 4 countries, Kenya, Nigeria, Pakistan, and Sri Lanka, abstained from the deal for now. U.S. Treasury Secretary Janet Yellen said the deal was a win for American families and international business, calling it a once-in-a-generation accomplishment for economic diplomacy.
A week filled with big Wall Street swings ended with a whimper Friday after another underwhelming monthly jobs report left investors scratching their heads. The Dow and the S&P 500 slipped 8 points each. The Nasdaq gave up 74. 194,000. That's how many jobs the U.S. created in September. That number was the weakest in 9 months and way less than the 500,000 figure Wall Street was expecting. The data suggests changes in the education sector are impacting hiring numbers, and many Americans still seem afraid to return to the workforce during the health crisis. That really showed up in the unemployment rate, which tumbled to an 18-month low of 4.8% as more people gave up looking for work. Peter Cardillo, chief market economist at Spartan Capital Securities, is surprised at the stock market's muted response.
We also saw hourly wages go up a little bit more than we expected, and that's contributing to future wage inflation. And, the 10-year traded above 160. And so the market is really holding on to itself. I suspect that, investors are looking forward to the earnings season, which begins next week.
In other market news, crude oil prices touched $80 a barrel in U.S. trading on Friday. That's a 7-year high. Prices are up around the world due to a lack of supplies heading into the colder months for the Northern Hemisphere. Oil prices were up more than 4% for the week. That oil spike gave energy stocks a boost. ExxonMobil shares rallied 2.5%. Chevron gained 2.25%. Sticking with stock movers, media conglomerate Comcast was cast in a negative light amid fears the cable industry is facing increased competition from broadband. Shares of Comcast slumped 4.7%. Charter Communications was down almost 5%. Crude oil prices jumped to a 7-year high of $80 a barrel in the U.S. Friday, and oil prices are at multi-year highs in Europe as well. China is so worried about higher energy costs that on Friday, it ordered an increase in coal production. From country to country, energy demand from a rebounding economy is outstripping supply, leading to a spike in energy bills. And there's growing fear a cold winter in the Northern Hemisphere could make the supply shortage even worse and drive prices even higher. Adding further upward pricing pressure, OPEC and its allies aren't rushing to open the spigot. This week, the group agreed to stick to a plan to only boost supplies by 400,000 barrels of oil per day after a historic supply cut last year. And it's not just oil prices on the move. In Europe, natural gas prices are up more than 300% this year, sparking concerns about inflation and widespread economic angst. Yelena Bermatrova is Export Director General for Russian energy giant Gazprom.
Currently, the European spot market shows a high price volatility and is disorienting both buyers and sellers. This brings risks of destabilizing the entire regional economy.
But DataTrek Research co-founder Nick Colas doesn't see higher energy costs as anything more than a speed bump for the U.S. economy, unless prices go significantly higher.
So there is a historical precedent to say that oil prices go up in recoveries. It's happening again now. We think oil prices go back to 95 to 100 in fairly short order, but we're not overly concerned because the history says that is not enough to derail a recovery. Now, if you're talking 120, 140 a barrel, that is a problem.
The White House, however, is concerned. The U.S. Department of Energy said all, quote, tools are always on the table as it monitors tight supplies and rising energy costs.
Tata Sons has been chosen as the winning bidder to take over Air India. That's according to the Indian government Friday. It marks the end of years of struggle to privatise the state-run airline. Tata Sons is the holding company for the Autos to Steel Tata conglomerate. Indian officials said the group will pay around $2.4 billion for a 100% stake in Air India. Tata's bid will see it take on $2 billion of the carrier's $8.2 billion debt. A successful privatisation of Air India would be a win for Prime Minister Narendra Modi's government. The airline has cost taxpayers an average of nearly $3 million a day for the past decade. The sale would help Modi's plan to sell stakes in a number of state-run firms. He's aiming to get more cash for the government from the sales and make India a fully market-driven economy.
Andres Hernandez's pristine white salt flats on the Spanish island of La Palma have turned black. A third of his annual production in the past 2 weeks has been ruined since the Cumbre Vieja volcano erupted there. The Hernandez family is used to living under the threat of volcanoes. La Palma's last eruption was 50 years ago. Lava stopped about 655 feet short of his family's salt works, putting them out of business for 2 years. Now Hernandez, a third-generation salt flat owner, is resolved to cleaning up and carrying on making salt.
When the ash fell, we were about to collect the salt, but it's completely covered everything, created a crust on top, and we can't separate the salt from the ash. It's completely penetrated the grain. It's impossible to separate.
The eruption has also deterred visitors to the salt works, one of the island's tourist attractions.
The contrast here should be between the white salt and the black volcanic rock, but what we have here is grey ash and black volcanic material. As owners of this place who live here, we feel very sad to see the salt flats in this condition. It looks abandoned with no activity.
The volcano, 11 miles away, has been blasting out jets of lava and ash since September 19th, destroying hundreds of buildings and farms and forcing the evacuation of thousands of people. The economic damage has yet to be properly evaluated. But Hernandez remains positive, saying that many on the island are much worse off.
Perhaps they've lost more than us. They've lost their entire homes, everything. But we've only lost salt production, which we can recover. It'll take lots of work, but we'll be able to recover this area.